Greetings traders, Dr. Barry Burns here with the Top Dog Trading video for today. Today I'm going to share with you my general approach to trading. You know, there's a lot of different styles or methodologies to trading. Some of them are based on fundamentals. Others are based on technical analysis. Some are even based on astrology. Some are based on gut feeling. And mine, the way that I have decided to go with trading, is really kind of a legal approach, if you will. So, and to me, it's a very logical approach. It's a very mathematical approach. It's one that just makes sense. And I'm not a big believer in esoteric theories and methodologies and numerology and all that stuff. To me, I have found over the years, and I've been doing this quite a few years, that it really comes down to just some very simple, logical, objective, measurable things. And when my money's at stake, you know, when my money's on the line, boy, I take that pretty seriously. And my capital is very, very important to me because it's not just green pieces of paper, but it's food for the table, it's roof over the head, it's college education for my kids, you know, it's the next vacation. And so when it comes down to it, I don't have the luxury of pretending that something cool might work. I need to make sure it works. I've got to run my business as a business, and make no mistake about it, trading is not a game. If you want to be successful at trading, you need to treat it like a business. So here's how I do it, okay? First of all, I'm looking for high probability scenarios. And that's the mathematical part of it, is we want an edge, something that puts the probability on our side. And then I use technical analysis to measure what I call energies in the market. These energies are what is. It's not theories, it's what really is there in the chart. We use certain indicators to measure those energies and tell us exactly what's going on with this chart. So 5 of these energies are listed right here. Trend, and trend just means direction, up, down, sideways. 3 choices. And then we use another indicator for momentum. Now, momentum, I mean to be just the strength of the trend. So they say the trend is your friend. Well, you know, anything can be your friend. I'm not a big proponent of the trend is your friend, actually, because I don't know how strong that trend is unless I add a momentum indicator. The momentum indicator tells me if that's a strong uptrend or a weak uptrend. If it's a weak uptrend or a weak downtrend, then the trend is not my friend. Then really the trend could just be faking me out. Yeah, the market's going down right now. It's made lower lows, lower highs. But if it's a weak trend, that could be it. And just about the time I'm ready to short, then boom, the market goes up because the move down was a weak move down. So trend without momentum is a fool's game. So you need both of those energies. And then the third energy I measure is called fractals. And what I mean by that, a fractal is just a different scale of something that you're looking at. So in this sense, we're looking at different time frames in the market. For example, a 5-minute chart and a 15-minute chart, or a daily chart and a weekly chart. Again, you could be looking at a nice downtrend on the daily chart, say, oh, market's trending down. But then when you look over at your weekly chart, you realize, no, the weekly is in a major uptrend, and what looks like a downtrend on the daily chart is really just a retrace of the uptrend on a weekly chart. And so therefore you need to see the big picture, the bird's eye view of how this one chart you're looking at fits into the bigger picture. Okay, and then the fourth energy is support and resistance. And that's really a blockage to energy. So you might have a trend with momentum and it looks good on both time frames, but you're buying right into resistance. Could be a triple cluster, Fibonacci levels, very strong horizontal resistance, pivot levels, yada, yada, yada. You don't want to buy into resistance. You don't want to sell into support. You want to buy off of support with room to run. And then cycles. And cycles are very, very important because they're about timing. W.D. Gann said that time is more important than price. And that's true because when you get in is everything. So the market moves up, but it doesn't move up in a straight line. It moves up kind of like this. Well, these are your cycles, and you want to buy here at cycle bottoms. So in an uptrend, we're not too interested in selling cycle tops, but we're very interested in buying cycle bottoms. And the same thing for downtrends. Except in a downtrend, market really moves like this, and we want to sell or short cycle tops. So we want to find the perfect time to enter in. Now, those are 5 different energies, and they're very, very important. No one energy is going to make you money. We're very interested in putting them together for a probability scenario. So a good trader is the judge, the jury, and you got to execute your trade, so you're the executioner. But in this court of law, the court of trading, we use Napoleonic law. So the trade is guilty until proven innocent. Because I know from a lot of time in trading that the market likes to steal my money. It's a thief. So I'm going to assume that the market is trying to steal my money every time a trade setup comes. And I'm going to presume it guilty until I prove it innocent. And how do I prove it innocent? Well, it's going to be a preponderance of the evidence. So we consider the source of the evidence. Is the evidence the brother, the lover, or impartial bystander? I'm not going to trust the testimony from relatives. In other words, if I have 5 trending indicators on my chart, I can't count that 5 times as a preponderance of the evidence. Look, 5 witnesses all say to go along. No, because they're all related. I need 5 different indicators representing 5 different energies in this case. And finally, you also really need to understand that it isn't a foolproof process, and that sometimes the evidence will point to the wrong verdict. And when it is discovered that the evidence is pointed to the wrong verdict, you need to get out of that trade or get the trade out of jail as soon as possible. And that's good money management and good trade discipline. So the way I trade is very simple and very objective. We've got our 5 energies here, and we look at the point at which we're ready to get in, and through preponderance of the evidence we put together a probability scenario, and then we score the trade. So if during the setup trend is on our side, momentum isn't, but fractals are, support resistance is, and cycles are, then we score the trade a 4 out of 5. The highest you can get is a 5. And now you have to decide, based on your risk tolerance, how much assurance do you need, how much evidence do you need to put your money at risk? Is this good enough? Is a 4 out of 5 comfortable for you? If you're a very conservative trader, you might say, no, I'll only take trades that are 5 out of 5s, and then that's fine. And you'll get less trades, but you'll get better, higher probability trades. Or you might be someone who says, you know what, I'm more of a risk taker. I can handle trades that are 4 out of 5. And yeah, I might get some more losses, but I'll get more opportunities because it's more rare to get all 5 energies lined up at the same time. And I want more trades than that. So I'll take 4 out of 5. And yeah, I might get more losses, but I'm going to get more wins too. And losses don't bother me that much. If I get a little drawdown, doesn't bother me. If you're a real risk taker, you might say, I only need 3 out of 5. And then you're going to have some, more profound drawdowns, but you'll be a much more active trader, and you'll catch more opportunities that will otherwise go by. So that's my approach to trading, and it works very, very well. I love it because it's very objective, of course. in this short video, we don't have the time to go through and show you exactly how we measure trend, how we measure momentum, how we measure fractals and these other energies. But we have a very objective way of measuring them with certain indicators, and then we can actually keep score, write it down, and on my trading log, I know exactly what score and which energies were involved in every single trade. Then I can go back and evaluate it, and it makes for an excellent trading methodology.